It was a 9-0 majority vote in favour of a rate cut. Remember, the last meeting in December, the bank held rates with a 6-3 split. So that showed, one of those was the Deputy Governor, that the bank was on the path towards a rate cut. The previous cut was in November, 2 cuts in 2024. It's been cut, hold. Now we've had another cut. The expectations are that this will be the first of perhaps a couple more this year as the bank looks to hit the 2% inflation mark. But also it's got one eye as well on as well as the interest rate, the inflation target of 2%, which was supported by figures in December which showed an unexpected fall in inflation. They will have an eye on a cooling of the economy and perhaps a slowing of the economy, in large part because of what's happening over the other side of the Atlantic. Donald Trump's, we've seen disruption, haven't we? We've seen a 24-hour trade war this week. We've seen tariffs, the spectre of tariffs looming, if not the reality. So there's some uncertainty around the growth we'll be expecting this year in the economy. I'm just looking at the minutes here. Perhaps you've seen something.
Well, I was just going to bring you in just two other pieces of information that we're getting. This is one around the Bank of England's inflation, and that is expected to peak at 3.7% in the third quarter of this year. So the Bank of England predicting that inflation will rise this year, but will peak at 3.7%. So there is still concern about inflation. The other interesting thing is that they are saying, the Bank of England, that they are monitoring US tariffs closely and that more protectionism would have a negative impact on the world, i.e. hinting quite strongly there that what they are concerned about is potentially Donald Trump imposing tariffs on the UK or indeed others and the impact that could have on growth. And Paul, you know, unsurprisingly, again, this is having an impact on sterling that has fallen on the back of this decision this lunchtime.
Yeah, it has, and I can't find the today, as well as this decision on cuts, we'll get a full forecast for the year ahead. I can't find the growth number here, but the bank has said GDP growth, this is the minutes of the meeting that's reached this decision. GDP growth has been weaker than expected at the time of the November monetary policy report. Their last forecast, that was the previous cut. Indicators of business and consumer confidence have declined. So there's that concern about a slowing economy. They do say growth is expected to pick up from the middle of this year. They do think that the labour market is easing a bit, but then again, the bank, as we know, is flying a little blind when it comes to labour numbers. Businesses simply don't tell them how many people they're employing at the moment. So they're clearly making a decision here to try, and they feel they have the room to make this cut, which will be welcome to borrowers, particularly mortgage holders, of course, and those who might be looking at a renegotiation of their mortgage this year, but also this concern that despite all the talk of growth, it is not coming as rapidly as required. And so the economy needs a little bit more heat under it.
And this is important, isn't it, Paul, for the public finances, because ultimately the government is going to have to make a decision, you know, pretty soon, actually, about public spending. And if they can't find growth, we may well have to see spending cuts.
Yeah, precisely the conditions. If we could find 3% growth as easy as that, then there'd be no need for any tax rises, depending on what you want to do with it, of course. So it would make many of these problems go away. There's an interesting, much of this report, which we'll be able to get into, and I'm sure Ed will have, when we see Ed Conway, he'll have had a chance to read it all inside the bank in the last couple of hours. Part of it's the bank's hard forecasts. Quite a lot of this is reading the runes, and there's a line here which suggests to me that the bank is still stuck on the same path which has been indicated of gradual cuts, a gradual easing of rates. Based on the committee's evolving view of the medium-term outlook for inflation, they say a gradual and careful approach to the withdrawal of monetary policy restraint is appropriate. That tells us we can expect a couple more cuts, but it won't happen in a hurry.
We were looking for that growth figure. I just see it now on wires from the Press Association. The Bank of England saying it expects the UK, wait for this, the UK economy to grow by just 0.75% this year. That is down from 1.5%.
So that's half.
That is quite stark. You know, let's not forget this. This is a government that says we want to go for growth. Growth is at the centre of everything we want to do. And the Bank of England's in the first growth forecast for this year are saying they're expecting it to grow by half as much as previously forecast.
And in November, this is only November, they were saying 1.5%. We thought they might reduce that to 1%. Halving it is pretty stark and not news that they will be wanting to hear in Downing Street.
No, definitely not. Paul, thank you.